International rating company Moodys and the Chartered Institute of Bankers of Nigeria have highlighted the negative impact of the newly proposed windfall tax on banks in the country. Last week Wednesday, the Senate gave expeditious passage to President Bola Tinubu's request to amend the Finance Act to impose a one-time 50% windfall tax on banks' foreign exchange profits in 2023. The Senate amended the bill on Tuesday, increasing the windfall tax to 70%, claiming that the gains were a result of government policy and not effort on the part of the banks. In a report titled Nigerians' Proposed Windfall Tax on Foreign Exchange Gains is Credit Negative for Banks, Moodys says the windfall tax will have a particularly negative effect on banks whose capital adequacy is close to regulatory thresholds. The tax follows record profits declared by banks in 2023, largely because of foreign currency revaluation gains related to the Naira's massive devaluation of 37% in June 2023. According to the rating company, given that banks have already been subject to the standard 30% corporate income tax rate for 2023, in a less aggressive scenario, a surplus tax of 20% of the FX gains will equate to total 50% windfall tax. Moodys said that the windfall tax may yield revenue as much as 0.3% of 2024 GDP to the government. He stated that although this is not negligible, given the government's small tax intakes of around 9% of GDP in 2023, it remains marginal and only a temporary revenue measure. Describing the windfall tax as discriminatory, the president/chairman of Council CIBN, Professor Pius Olarewaju, in a statement made available to newsmen Wednesday said, this proposed tax would violate fairness and equity in taxation, as banks are the only entity singled out for this payment. This is discriminatory. Imposing taxes on foreign exchange gains may deter foreign investors and negatively impact Nigeria's investment landscape, especially at a time when banks are required to raise capital and they may be looking towards foreign investors.